The market is ripping hard. The bulls are firmly in control. The SPX hitting 7,400. And here's why this thing could just be getting started. What is going on, everyone? Jeremy Hritz here. Courage pays better than fear trading. I hope you are having a phenomenal week. Man, this is one bullish market. And really, it's kind of a one-sided market if you really boil it down and look at it, because it's the semiconductors, the chip sector that is driving this thing, big tech. All you have to do is look at those chip names: AMD, Nvidia, ARM. Insert your chip company here and it's ripping. And then you look at the memory chips. They're trading like meme stocks. I'm talking MU, SanDisk, Western Digital. They are on a tear. And MU, I think, even though the market's closed, has just made another new all-time high. So it just keeps pushing and pushing and ripping and ripping. And what we want to see is a little bit of broadening out, see some flows into other sectors. I know a lot of people are watching software because it has been beat up so bad, to see if there's a rotation into those companies, the ones who are actually going to make it. And two, crypto, we look at Bitcoin, we look at any crypto proxy stocks like Coinbase, Robinhood, and we're seeing those companies just kind of chop a little bit. There's not much, has been much movement there. So let's see if we get some rotation into those areas. But really, this is a semiconductor. This is a AI. This is a chip. This is a big tech bull market as of right now. Now, here's the thing, and I've been meaning to put this in a video to share with you guys, is typically when you look at the 4-year term of a president, that the weakest year is typically year number 2. Now, I know that we're not even halfway through 2026 yet, and I know things are ripping right now, and we can see a drawdown 100%. Again, year number 2 tends to be the weakest, and we are just now entering the worst 6 months of the market according to seasonality, right? That starts in May and it runs through October. So we very well still can get a significant drawdown. And let's be honest, there are lots of risk factors out there that we need to pay attention to, things that can become headwinds. One just being the market is extremely overvalued, overstretched right now. You don't need to be a chartist and looking at a candlestick chart to see that things need to cool off a bit, right? They're very extended, overbought, especially those chip names. So that's the first thing. And there is a little bit of euphoria out there that this thing can't come down. But we also have inflation rising. We still have this conflict between the United States and Iran that hasn't fully been taken care of yet, that is still out there, that is pressuring things, and could, if things escalate and get worse, could put pressure on this market and we can see another decline. And some people have talked about too, that the longer that this persists, the longer the energy prices stay high, that could push inflation up, and that could trigger not just a recession, but a global recession. So there's lots of things at play here that we need to be aware of. So we absolutely can still see some weakness come in to the market here in year number 2. But here's what I want to point out to you guys, and did my homework on this. Year 3 of a president's term is typically known as the sweet spot of the term. And I want you guys to see if you can answer this question off the top of your head. How many bear markets have started in year 3 of a president's term? Do you know the answer? 1. So in the history of the markets in the United States, only one bear market has began in year number 3. And typically year number 3 tends to be the strongest year for a president's term because it's the pre-election year. So Just keep that in mind as I'm talking through this. So if that in fact holds true and the market keeps ripping like it is, and we go into year number 3, and historically the data tells us that we're about to head higher, just what is possible for this market, right? That would be crazy. Now, here's the other part I want to talk about. That one bear market that did start in 1973, that was Richard Nixon's 3rd year. Oh, here come the police. Oh, never mind. It's a medic. Hope everybody's okay there. But that one bear market just started in 1973. It was Nixon's 3rd year. Guess what it was related to? An oil crisis. Interesting, right? So something to think about, something to pay attention to. I'm sure you've heard the quotation before. History doesn't repeat, but it often rhymes. So more reason for this conflict to get squashed, move beyond it, so that that risk doesn't hang out there. But the more important takeaway that I want you guys to have from this video is that even though the market is at all-time highs, and yes, we are due for a cool down, we are heading into a weaker period seasonally, May through October, it doesn't mean that it has to end anytime soon. Remember, the markets can be irrational. They can stay irrational longer than you can stay solvent, right? And cash flow positive. And just because we need a pullback based on the technicals, based on the charts, just because things do need to cool off, doesn't mean that they have to. And the fact that we're getting ready for year number 3 of Trump's term, and we know that that historically is the strongest of the cycle, this thing could just be getting started. So that's what I got for you here today on this episode of Driven. Wanted to share a little bit of history with you guys in terms of what happens in that 3rd year of the presidency. And let me know in the comments below, do you think this market will just continue to rip into the end of the year, or are we going to see some headwinds come into play, pressure us to the downside here, get some weakness, a correction, another correction, because we just had one, except on the SPX, we didn't hit 10% before going by the true numbers. But are we going to see some more weakness coming into these next 6 months that sets us up for the next leg higher? Or worse yet, is a bear market coming? Let me know in the comments below what you foresee happening in the markets and why. I would love to hear your rationale for that. And while I got your attention, please help me as I work to get 1 million people open a brokerage account and buy 1 share of stock. I want to empower people and get them to see that, hey, they can become a business owner. They can become an investor, and that it's very simple to do that. This is going to be a focus of the channel for the next year. We're trying to get 1 million people to open a brokerage account and buy a stock. We want to empower them, become a business owner. So share that with everybody that you know. The link for that is in the description below. 1 million investors. That's the goal, and that's the name of the movement. And then also too, if you are looking to learn how to trade the markets, please click the link in the description for my free course, 4 videos. It covers everything from start to finish to give you the basics, the fundamentals. It's probably about 4.5 to 5 hours worth of education, high quality stuff. Check that out down below and get started with your learning. And watch one of these videos here on the screen and make it a great day. Honor the moment, and most importantly, be grateful, everyone. Take care.